Okay, so inventory's up and both closed and pending sales are down for the month of June 2022. So if you want to find out what exactly this means for the Boise market and where I think we're heading, watch the rest of this video. All right, guys, we're gonna look at this video a little bit different. There's a lot of data, so I'm doing a screen recording here. We'll dive into it, make sure you can understand everything we're looking at, and then we'll start to talk about a little bit of why we're going in the direction we're going, what direction it is, and some speculative stuff that is, just my professional opinion, and we'll see if it actually pans out. So first and foremost, you've seen the data here on the market dynamics. If you want to see this for any area, reach out to the team, send me a message or send our team or your favorite owned Boise agent a message. If you don't have one, get one. We'd love to help you out, and we'd love to answer your questions. We don't bite. We won't even bug you. Just reach out and say you want the market dynamics. We have it in the description. You can click a link and get the market data for any area you want. Now, with that said, we're going to look at this in a different format. So all this data you're seeing here is all right here. It's a little bit prettier and easier to see. So this is month over month, or year over year market data. We're just going to focus on that right now. So you can see inventory is up significantly. We have 289% increase on inventory year over year. Now, just perspective on that, if this is the first video you're watching that I've done, this is a historically low number. It's way too low. This is closer to a normal number, but it's also a big jump up from recent times. Pendings are down year over year. We're down 32%. And then the sold and closed were down 18% year over year. But this is the number that I wanted to focus on for you guys, is price reductions, because this is showing us a little bit about what the market is revealing to us, if you will. So in June of 2021, we had 214 price reductions. So the sellers had their home on the market. They chose to lower the price. Well, we had almost 6 times as many price reductions in June of 2022. Now, that could be for a number of different reasons. The biggest one is the home's not selling, right? If the home sells, they don't reduce their price. So that's the obvious thing here. And we do have more homes on the market, so you would expect to see more price reductions, but we 6X'd on price reductions. We didn't 6X on inventory. So clearly, we have a lot of sellers that are missing the boat on pricing. Now that's expected to happen when you see the market doing this and this and this, and then all of a sudden it starts to shift. You don't know when it's going to happen, so you're going to see price reductions like this. I don't know how long we'll see this many price reductions coming in each and every single month, but it is something that I do expect to see more and more of. So what does this mean? Well, if you're a buyer, this is really interesting. You don't want to be a buyer back when there was 479 homes on the market. You had very little to choose from, and no one wanted to negotiate. Well, as a buyer, you have a lot more options to look at, and you can probably negotiate. Hire a great agent, have them go to bat for you, and see what they can figure out. In fact, we're seeing, for buyers out there, we're seeing lots of cases where we can get the seller to put money towards buying your interest rate down and even getting the payment close to what it would have been 6 months ago. So talk to us about that. We'd love to answer those questions for you and show you how we can actually get that done. So that's the direction the market's heading. We're seeing inventory increase. We're seeing pricing come down. How much has the market actually shifted down? Well, if you look at the actual sold prices, we're not seeing it a lot. But remember, solds are kind of lagging, right? Most of those homes that sold in June, they probably went under contract in April and May. So I would expect to see this number start to come down and trend downward over the next few months. Now, this number going up, this is an interesting one. And this is that speculative piece that I wanted to bring to the table here. You have a lot of people who are trying to sell their home. Now, I don't know how many of those are actually going to sell their home. And if their home doesn't sell at the price they thought they could get, that their realtor said they could get, or that maybe they thought it was worth, and they asked the realtor to list it at, what if they aren't able to sell at that price? Are they still a seller? Now, there's always going to be people that have to sell. They get a job relocation, there's a death, a divorce, some sort of family life change, like maybe a couple get, I see this happen all the time. You have someone owns a house, the husband owns a house, wife owns a house, or they weren't married, now they're getting married and they have to sell one, or they sell them both and then buy. You're seeing stuff all the time where people have to make a change. But trust me, there's plenty of people who want to make a change, but they don't have to. And so of this 1,386 homes, which I expect to go up, we'll probably see maybe 15, 16, 1,700 homes next month. Of those homes, how many of those have to sell? How many of those have a compelling reason and regardless of price will sell their home? Because that's the number I'm going to be keeping an eye on, because I see this inventory number creeping up and then starting to come down when we see September, October. They're not getting the number they thought they could get. And now they're just not going to sell at all. They're going to say, well, once it's worth X again, I'll sell, which might be 2, 3, 4 years. We don't know. So that's something I'm keeping an eye on. And my guess is a lot of this inventory is not have to sell people. What's the number? I have no idea. Maybe it's half. Maybe it's 20%. Maybe it's 60%. I have no clue. But that's something to keep an eye on. Now, one of the reasons, this is the last thing I want to talk about, and it's going to take a little bit of time, but one of the reasons that so many experts are not predicting this shift, which we're definitely in a shift, guys, it's moving quickly. They're not predicting this shift to be what we saw back in 2006, 7, and 8 with the Great Recession. And a lot of it's due to the housing shortage, okay? So let's go ahead and look at some of the factors that are impacting the housing market. The first one's the housing shortage. So one of the estimates is that we have 3.8 million homes short. Now, I will post this link in the description to this video, but you can see right here, they estimate by the end of 2020 that we were short housing supply 3.8 million units. Now, you can read the article. I'll give you the kind of the CNN headline version. The main reason was back in 2006, 7, and 8, there was a tremendous amount of home builders and developers who went out of business. And they couldn't get the money to finance to build new homes because the banks pulled back and said, it's too risky. So lots and lots and lots of home development and home building did not take place. There's many estimates around that, but they typically build about 1 million homes a year. And the estimates I've heard has been a couple million homes did not get built. The other thing that they're predicting is that, or that they're saying is leading into this, is that the millennial group, so the age group of millennials, I think it's like 1981 to 1990 something, they are entering the housing market in massive, massive ways. So that's also a huge cause to why we're seeing less and less home supply. One of the things they don't mention, which I know all of us know this to be true, there's so many more Airbnbs and VRBOs today. Airbnb wasn't even a thing in the Great Recession. It didn't even exist. VRBO did, but it wasn't on a massive, massive level. There's, got to be 10x or more homes that are on this vacation home, the hotel type housing situation. I've used them. You've probably used them when you go on a trip. You consider Airbnb and VRBO. Well, that's, millions of homes that are out of the market that are not being lived in. And then the last one is institutional investors in single family. Institutional investors have invested in real estate for, forever. But the single family investment side is mostly a recent thing in the last, 10, 12 years. In fact, I'm talking with one of my national builders that I work with, they are building subdivisions for investors. So they build the entire subdivision, they lease up half of it, and then they sell it. And they're selling it to Wall Street money. And just here in Boise, Idaho, in the Boise, Idaho area, we have 3 that I can think of, maybe 4. There's one off 10 Mile and the freeway that's being built. There's one off Black Cat and Shinden that's being built. There's one in Star that's done or in the process of being completed. There are many of these subdivisions that are strictly investment properties. So just think about that. If we weren't doing that back in 05, 06, 07, which we weren't, guys, it was not a thing. It wasn't on a big level like it is today. Those are homes that cannot be built for single family residents because you only have so many framers, you only have so many sheetrock guys, you only have so many roofers. Like every home that gets built for that is a home that does not get built to be lived in as a single family residence. So that's been a big reason why the supply's been down and the prices have gone up. All right, so the last thing is rising interest rates. And you might be thinking rising interest rates are obviously the reason why housing prices getting downward pressure in the first place. And obviously that's true. But one of the things I want to talk about is how is that going to impact inventory? And I think there's a lot of people out there who maybe would have sold if rates would have stayed low because they could easily trade into another property. But they're thinking twice because, well, I've got a 3% rate or a 4% rate and I have to trade for a 5.5 or a 6. So it's going to have to be a really good deal, right? Or I'm not going to make that trade. Now you might be thinking, well, housing prices are going to come down and that's going to be a really good deal and then they're going to make the trade. Well, that's the question, right? That's the crux of the conversation is, if there's not a lot of homes on the market, how are we going to get the housing price to come down significantly? Now, I do think housing prices come down. I just don't think we see what we saw back in the Great Recession, which is basically on a national level. We saw about a 40% reduction, which took, from 2007 until about 2010. So it took about 3 years. The other thing is they have affordable payments currently. Now, the reason I bring that up is because you might be thinking, well, those people will just sell their home, cash out, and then they'll go rent. Well, that kind of goes into the last thing, which we'll talk about in a second. But, their payments are so good. The rental rates are high. I mean, a lot of these people would be trading their house payment for a higher rental payment and maybe not as nice of a place. I know in the Boise area, that's true for a lot of people I talk to. And there's plenty of equity. You go back to 05, 06, 07, 08, the lending practices were way different than they are today. You could pull out 95%, in some cases 100% of the money from your house, and people were doing that to buy the next one. So they had no equity. And lending practices are not that way today. So there's way more people with lots and lots of equity. So that leads to less distressed sales. And the reason that's important is when it's a distressed sale, you just got to get rid of it. The conditions goes bad. You drive the housing price down. That's really a big part of what led to our issue back in, when I was selling real estate right here in this area more than 13 years ago. Almost half of our inventory was distressed. So it was bank-owned property or short sales. And those people didn't take very good care of their homes, or they weren't even there to take care of their homes. So the yards were in rough shape. Maybe they didn't winterize them. Maybe they were vandalized. All those things put downward pressure on homes. But if you've got equity, that's not going to happen. Upward pressure on rental rates. Now, this is just the thing to think about. Every 1% that the interest rate goes up is about a 10% reduction in affordability. So example, if you can afford a $500,000 house at 3%, it's going to be about, at 6%, it's going to be about $350,000 that you can afford. So that's key. Now let's change that to different numbers. Let's say you could afford a $400,000 house. Well, if you just lost 30% in what you can afford, that's going to be 30% of 400,000 be 120 grand, which means you can only afford 280,000 a day. And there's not a ton of homes at 280,000 in the Boise area. So those people who would have been home buyers 6 months ago, now they're renters. Those are people that are going to be renting, either homes or apartments. And those renters, those rental rates are going to go up because there's not a lot of inventory on the rental side either. So one of the predictions I got from the National Home Builders and their economists was they predict that rental rates will rise to such a point that they'll actually be really close to the same affordability as buying in the coming years. And so that's something to keep an eye on. All right, so with all that said, what does this mean and where are we going? Guys, no one knows. No one knows exactly where we're going. There could be some other black swan event that we have no clue and could never predict. But one of the things I'm going to be keeping a very close eye on is this inventory level, and particularly around September, October. Do we have a lot of people still trying to sell their home, or did we get down to the nitty gritty and just the people who actually are selling their property? So that's the number one thing I'm keeping an eye on. And then obviously interest rates are, that's probably an equivalent thing. We actually have on June 13th, or July 13th, excuse me, the next CPI, that's a consumer pricing index, that will come out, and we'll see what the inflation numbers look like. And if we don't see a positive direction on those inflation numbers, you can definitely expect the Fed to increase the federal funds rate, which ultimately will filter its way down to the 30-year fixed rate. That's just the way it works. They're not a direct connector, but they definitely talk to each other. So we're keeping an eye on interest rates. We'll take a look at that. We'll update you in the next video. And yeah, that's it, guys. If you have questions about real estate or need anything with real estate, I've said this before and I'll say it again, but as this market shifts, you need to have an advocate, someone that knows what they're doing, knows how to navigate this market, knows how to help you price your home correctly so it gets sold. And if you're a buyer, they know how to negotiate for you so you're not overpaying in a market that's shifting. And if you don't have someone that works in this market full time, and to be frank, doesn't do this every single day, you might be leaving some money on the table. So give us a shot, interview us for the opportunity to help you buy or sell or even invest in this market. We'd love to do so. I'm Chase Craig with Own Boise. I hope you enjoyed this video. Thanks for sticking around for the whole thing. If you liked it, hit the like button. And if you've got questions, write them in the comments. And of course, if you want to be notified about the next one, push the subscribe button. We do lots of videos, and we are going to continue to do lots of videos on the Boise real estate market. So thanks again for watching. Have an amazing day.